Hi there, welcome to Kneppy Invest and welcome to the 31st of July 2025. Time is currently 3:49 p.m, so about 20 minutes left of trading today. Okay, the agenda for today's video. Now, before we have a look at the ASX today, I just want to discuss the last day of the month. For me, it is the busiest or one of the busiest, the 4 busiest days on the investing calendar. I'll talk about why and a few adjustments I have made to my day. I'll discuss that in a second. And after that, we'll have a look at the ASX today, talk about the best and worst performing sectors, indices, and also companies. And then the top 5 stocks of the day. Should I say? Yes, I will. I have been excluding any companies that had a pretty good day because they released pretty good or really good Appendix 4Cs or 5Bs. But I have included, like yesterday, I included Appendix as a stock of the day. And today I have included 2 companies that released their Appendix 4C today that I found to be quite disappointing. Yes, I'm looking at you, Pointerra. Okay, and then after the top 5 stocks of the day, we'll have a look at the chart of the day and maybe a few of your comments, although I could include a few of your comments as I discuss Appendix 4Cs. Okay, so it is a final day of July, and I have found that the final day of July, just like the final day of October, January, and April, tend to be the busiest days on the investing calendar for me. And the main reason behind that is because the vast majority of companies that are required to release their quarter results, Appendix 4B or 5C, no, 4C or 5B, tend to be, how do I say this nicely, tend to be really crappy companies that aren't going anywhere. And they tend to wait to the last minute to release their quarterly report. And so we get an absolute massive amount, an influx of announcements released today. For instance, today, if we have a look, that's not right. That is not right. We've seen about 120 Appendix 5Bs released so far today and about 120 Appendix 4Cs. And we're going to see a lot more released during the rest of the day. They just trickle in all day. It does become annoying after a while. And by the end of today, I am quite sick of looking at all these really crappy Appendix 4Cs. Now, in saying that, the reason I go through most of these Appendix 4Cs, but I've made a little bit of a change. I'll talk about that in a second. But the reason I go through these is I'm finding the diamonds in the rough. And we have seen a few pretty good Appendix 4Cs and 5Bs released today. For instance, I liked Arctis. Adaba, I thought released a much better Appendix 4C. Affluence, what else? Doctor Anywhere, Electro Optics, Airtasker, Residence Health, and probably my favorite has been XRG. And I'm wondering if the share price is up big. I'm wondering 18.52%. This might have been my favorite Appendix 4C release today because the share price of this company has been dropping. I've been going, the market must be thinking it's going to be a bad quarter. And then I saw it and went, ooh, no, it's a pretty good quarter from this company. So you do find some diamonds in the rough. Unfortunately, they're not many. And it sort of makes sense. If a company had a bad quarter, more than likely they're going to wait to the last minute, release it among the rest of the dross. If a company has a really good quarter, release it early, get it out there before the final few days because you want to see your company shine. And I'll be honest with you, if only one company released their Appendix 4C on, say, the 12th of July, I will take way more notice to that particular Appendix 4C than if they release it on the last day. It makes sense to me. Now, what I have done today, a slight change, maybe not so slight, is I've realized there are so many mining exploring companies on the ASX, and just going through all these Appendix 5Bs where there is no production, no cash receipts, it's just pointless because at this stage, I know which mining companies are in production. And I found that I can just pick and choose which Appendix 5Bs to look at. Now, I might miss 1 or 2 mining companies that have just gone into production. I might miss those companies, but eventually I'll find them. And I'll be honest with you, the vast majority of Appendix 5Bs are crap anyway. So I've decided to make a slight change, and it has helped today. It has helped immensely. I have been much less busy today than I have been in other last days of the quarter reporting month. Anyway, that's all I'm going to talk about. Actually, no, I did mention earlier that I will just mention a few of your comments. There are a few comments in regarding to companies that did release good Appendix 4Cs or 5Bs. For instance, Stu Percy mentioned Vection Technologies. I thought their Appendix 4C that was released today, I think, if I remember correctly. I will not mention Vection Technologies. Not good enough to get into my Appendix 4C series. So I am doing these videos, Appendix 4C videos, for all companies, maybe not all, but many companies that did release, in my opinion, good Appendix 4Cs. Not bad, good Appendix 4Cs. Vection Technologies did not make it. There was a mention of Metro Mining. I'm pretty sure Metro Mining did release a pretty good Appendix 5B, so I will talk about that. Trader Hooper mentioned Aroa Biosurgery. That's definitely on my to-do list, so I'll do that in a few days. And there was another one here, DXN, from, I believe that was also from Stu Percy. If I can find it. There it is, Stu Percy. DXN report looked good. Funny enough, I'll be discussing DXN in my Appendix 4C video that I will be recording tomorrow alongside Unity. I think it's Unity, UNT, and also Phineas, FCL. So UNT or Unity, Phineas, and DXN. I'll be discussing those three companies in the video I'll be recording tomorrow, and I'll release that video sometime in September. Okay, that's all I really want to talk about when it comes to Appendix 4Cs. So today hasn't been as busy as it could have been just because of that slight adjustment I have made when it comes to Appendix 5Bs. Okay, now on to the ASX today. And it's been a really interesting day. And I might say that every single day, but maybe today has been a little bit more interesting because of copper. Yes, copper. In fact, copper is down 20.63% today. When I wake up, the first thing I do, apart from playing Wordle, I usually play Wordle first, get my brain into action. After Wordle, I usually go and see how Wall Street has performed. But not only Wall Street, I look at commodity prices, I look at bonds, I look at crypto. And the thing that struck me, and in fact, I had to look at it over again because I sort of went, I'm seeing things. So I went back to it and went, no, I'm not seeing things. Copper was down 17%. And I thought, what's going on here? So if I remember correctly, and I didn't really delve deeply into the story, it seems like there was this threat of tariffs on copper from Trump. But what he's done is he's not putting tariffs on copper, but he's putting tariffs on copper products like copper pipes, that sort of thing. So that's actually really beneficial for copper producing countries like Peru or Chile, but not beneficial for copper producing companies in the United States, and not beneficial for those companies that producing copper products overseas and then importing it. So that is why copper prices are down 20.59%. And in fact, you can see exactly what time this announcement was made. And in fact, it was made at about 4 a.m. Funny enough, about 4 a.m., there was a little bit of a spike in copper, and then it just dropped. And then we saw a bounce, dead cat bounce, and then drop again. So yeah, you can just exactly see what time this announcement was made. 4 a.m. our time. I woke up about 45 minutes later, and copper was down a massive amount. So that was one of the main driving forces on our market today. In fact, mining's had a really bad day, down 2.38%. But you'll notice tech is up 1.34%. What's going on there? NASDAQ had an okay night, up 0.16%. Dow Jones was down about 0.4%, if I remember correctly. I could be a little bit wrong there. Dow Jones down 0.38%. TSX down 0.62%. The other thing to notice is that tech has had a really good rally today. Really good rally. What has been happening? What has been happening? Now go have a look at NASDAQ futures, up 1.32%. What's going on there? Meta Platforms and Microsoft released their results after the market had closed over there. And I believe the futures for both those companies are up big. Definitely Meta was up 12% in after hours trading. So I haven't looked at these results just yet, even though I'm a shareholder of both companies. So it looks like really good performance from these two very high quality companies has driven the NASDAQ futures up, and that has had a positive effect on our market today, particularly with tech. But even the XJO has risen from the depths. Well, I shouldn't say that, but as low as 0.5% near open, and now only down 0.18%. Okay, so mining, a bad day. Tech's had a pretty good day. And if we have a look at the best performing sectors, yeah, tech or IT, discretion's had a pretty good day as well. And energy and materials. And in fact, look at materials down 2.66%. And not surprising because when I went through the top losers today, it was just full of mining companies. Lithium, I'm pretty sure coal's had a bad day, iron ore's had a bad day, gold's had a bad day, copper's had a bad day, you name it. It has had a bad day when it comes to mining. And I suppose maybe there's been a little bit of rotation from mining into banks. So banks have had an okay day today, up 0.42%. But it's really been about tech and mining. Tech good, mining bad. So ASX 200 resources down 2.38, gold down 2.86%. Okay, so let's turn our attention to the ASX 20, down 0.07%. I'm assuming WiseTech's up, Pro Medicus is up, Aristocrat's up, and the three mining companies, the three iron ore companies are down pretty big. So Fortescue, BHP, and Rio's down. Woodside might be down because I did see energy down. And I'm going to say 5 or 6 companies down. No, I'm going to say 7 down. 13 up, 7 down. 14 up, 6 down. You might be saying, how is that? How is that? How is that? How is that? When this particular indice is down, but most of the companies are up. And I think the main reason behind that is because these mining companies that are down big. For instance, I can see BHP down 2.5%, which is interesting because if you have a look at BHP's reports, they always mention copper first. And it seems like BHP wants to be known as a copper company. But if copper was down 25% or whatever it is down, BHP should be down even more than that. Even Rio Tinto is trying to say to the world, hey, we're a copper company too. And they're down 3.31%. So a really bad day for those three companies and a pretty bad day for Sigma Healthcare as well. Not sure what's happening. And as we look at the best performing companies, Woodside is actually up, by the way. And if you have a look at the best performing companies, I'm going to say WiseTech or Pro Medicus. Oh, completely wrong. Aristocrat, and then WiseTech and Pro Medicus. I didn't even think about Aristocrat. But anyways, you can see just a tech lean in the best performing companies in the ASX 20. Okay, now on to the top gainers. Okay, who do I want to talk about here? Who did I write down? Oh, I put down Droneshield. Okay, I'm going to talk about Droneshield. A lot of these other companies are up on sentiment or momentum, and nothing much released. Like Sunrise is up, Black Dragon is up, and I had a look, and Black Canyon is up. I had a look at if any of these companies have released anything of note today. No, just momentum, positive momentum. First Wave Cloud Technology did release an Appendix 4C, but low turnover. X Reality Group, there it is. I like their Appendix 4C, probably more than any. Income Asset Management. This is really interesting. I did a video on Income Asset Management yesterday. You'll see what I said about that company in September. They released an okay Appendix 4C. And there's Droneshield up 16.7%. I'll talk about that company in a second. RMA Global, another Appendix 4C that I did like today. Share price up 15.63%. And if you have a look at the best performing companies by market cap, Droneshield, Korea, my breakout stock yesterday, if I remember correctly, yes. Chart of the day yesterday. Electro Optics, I like their Appendix 4C. Looks like Weebit Nano, I haven't looked at their Appendix 4C yet. Share price up 12.3%. What else? Atura made an acquisition, if I remember correctly. Airtasker, their Appendix 4C was okay. Maybe not that great. And that's it. Okay, so what's happening with Droneshield? I saw the share price there, up 16.7%. And I was thinking, oh, they must have released something. They must have. No, they did not. They released an Appendix 4C yesterday, which was good. I was like, what's going on here? Could have been a broker report. Because a lot of times you'll see a company issue a downgrade or an upgrade, and then you'll see the share price drop or rise the next day, and it's because a broker updates their price targets. And then fortunately, Capital Brief mentioned somewhere here. I'm pretty sure they mentioned it because I read it somewhere. I read it. Here he goes. Droneshield shares rocket as Bell Potter upgrades to buy. And it still surprises me that people will buy on these sort of things. Upgraded the stock from hold to buy and left its 12-month price target unchanged at 380. and the share price of Droneshield is now 376. So the share price gets to like 390, then it's a sell or a hold. So then they'll change it again. And then will people sell it because of change it? Yeah, that's how it works, it seems like. So it seems like the positive momentum in Droneshield has been caused by this. Well, the Appendix 4C was quite good yesterday, and then this upgrade. And it's really funny because I looked at the chart and you can just see like there was a nice little dip in the share price. Why is there no Droneshield when I put it in? What's happening there? That's really interesting. Here, that's better. If we have a look, not the 1 minute chart, daily chart for Droneshield. Yeah, we had a really nice dip, and you can see a little bit of buying coming in when the share price hit the 25-day moving average. I saw that. I went, oh, should I take a position in Droneshield? And I went, no. And now the share price has rallied today. Still, I wouldn't be playing this one. Droneshield has a market cap of $4 billion, and I think there's going to be a lot of volatility moving forward for Droneshield. So for me, this is not much of a trade just because I don't have a lot of confidence in the share price of Droneshield moving significantly higher from here just because of the valuation. But if you love what the company is doing, go for it. You're the master of your own decision makings. Okay, what else do I want to talk about? Oh, the top losers. I almost forgot what I was doing. Top losers. Metal Hawk, I'll talk about Metal Hawk in a second. Share price down 52.7%. Cettire is a stock of the day, down 22.79%. Pointerra is number 3, maybe it should be number 2, down 19.3%. Medical Development International, another Appendix 4C I was looking forward to. They disappointed, share price down 15.33%, but not in my top 5. Maybe it should be, by the way. I don't think it was that bad, but the market didn't like it. Sun Silver, I think they did a capital raising. Maybe I could be wrong with that. And by percentage change, no, by market cap, sorry. MinRes down quite big. Beacj Energy is in my top 5. And we see a lot of other mining companies here. It's just full of mining companies, apart from Sky Network Television. Vulcan Energy, Kingstate, Metallium, Coronado, so maybe weakness in gold as well. Restaurant brands, but low turnover. Just full of mining companies. Core Lithium, I'm glad I sold out of my lithium stocks yesterday. And that's it. So let's talk about Metals Hawk. Down 52.7%. They did release something today, and I went straight past it. Initial RC results confirm gold system at thylacine. So obviously the market didn't like it at all. I did not open this up. This is the first time I've looked at this announcement, but I think it's prudent to take notice of the sort of announcement that can drive the share price down 52%. These drill results on first inspection are pretty weak. So we're talking about 1 meter at 1.59 grams per ton. So very not shallow, but they're not long, these drill hits, and there's not much grade. So that's the first thing if I saw this without knowing the share price was down, I'd be going, like, meh, a big meh, ew, big ew. Anyway, so let's have a look at the chart for Metals Hawk. MHK. Was it MHK? It is MHK. I can't see it. There it is. And look at this. So if you were trading this, a really nice breakout back in August of 2024. So 1 year ago, share price broke out about 7.5 cents, just under 10 cents. Share price went on a really good run, 5-bagger. And then we started to see a bit of weakness in the chart. In fact, we had a moving average crossover. So if you were trading this, there's a chance you could have got out the day before the share price dropped 52%. So this was an instance where paying close attention to a chart would have paid dividends, not literally, because you don't get any dividends for these type of companies. But yeah, look at that. Interesting chart for Metals Hawk. Okay, now on to the top 5 stocks of the day. Starting off with Alexium. Who's heard of this company? Hands up. Well, I have. The reason I took notice to Alexium was because there was one product. They have like a chemistry company. There's one product where like it's a material product, like a chemistry, they put on material and it was for running or something, or even more than that. The applications were quite big, where the hotter the material get, the cooler it became for whoever was wearing it. So this would be really relevant for runners like me. So you wear this material, and if it became really hot, it cooled you down. I was like, whoa, if this company can be successful with what they're trying to do here, wow. But there were many things to not like about this company. I've been following Alexium for quite a few years because of this. And then every single time I open up the Appendix 4C, just waiting for some momentum in the business, nothing. And the share price keeps on dropping. In fact, I have a feeling this company must have a market cap of like $5 million. $9.52 million. I opened up this Appendix 4C. Now, a lot of times they will release, if you go back through time, they also release some sort of presentation alongside it. Yes, maybe not. Last quarter they didn't. For some reason, I've always thought they released a presentation alongside the Appendix 4C, but they don't. Looks like they released a presentation just after it, like a week or 2 weeks after. Anyway, so I opened this up and I was disappointed. Well, to be honest with you, they were disappointed as well. Yeah. In fact, they said, the year continued to prove a difficult year for the company with respect to financial results, declining quarter on quarter. Oh, by the way, this company is mostly in the bed sector or the mattress sector, and the product they're selling, I think it's also pillow slips. What do you call them? Covers. And it's just making mattresses and pillow covers cooler when you touch it, sort of like the same chemistry. But it seems like the mattress bed sector in the United States is really weak right now. And that's what I get from the commentary. So anyway, they say here, with respect to declining quarter on quarter as core mattress market volumes continue to decline, mattress and tier one component manufacturers sought to cut costs by reducing product application amounts and sales cycles for new products. So those who are manufacturing mattresses don't care about this nice little product that could make the person who buys a mattress cooler when they lie on it. Frustratingly, the financial results have been disappointing despite significant advances in the company's technology and robust pipeline of new sales opportunities. So one of the reasons I think they have been disappointed and has been frustrating is because they're not diversified. They're just selling this one product to the mattress sector. They need to diversify, and I think that's what they're trying to do. So Alexium was successful in launching many new products in our thermal regulation. It's probably a good way to put it. Thermal regulation, yes, and flame-resistant technologies. Another thing they were trying to develop a relationship with the US Armed Forces in regards to flame-resistant uniforms, that sort of thing. I don't know where it's heading, but it's taking a while if it is heading anywhere, which might make sense because it's a government. Anyway, so they're talking about mattress industry statistics have consistently reported sharp declines in the post-pandemic era for the US mattress market. Despite the demand contraction in the 3-year historical market, the company has advanced its growth strategy through its various technology advances. But again, they're not diversified enough. By the way, I do find their technology interesting. I do read it on occasion. There's also mentioning US economic research in regards to Bedtimes magazine. For 2025, the forecast predicts a 3% increase in the value of mattress shipments. But they actually do mention, like they do talk about flame retardant, haven't gone that far into this document, but they do mention towards the bottom, if I can find it, it must have been right at the end somewhere. If I can find it. They did, I don't know where it is, but they did say, oh, here, it must have been here. Financial year 25 quarter 4 results. Company recorded lower than anticipated revenues for the fourth quarter of financial year 25, but looking ahead, the company expects revenue to strengthen in financial year 26 as near-term opportunities in the sales pipeline begin to convert. So maybe financial year 26 will be the turnaround for this company. Maybe, but I will want to wait to see the evidence for that. So disappointed with this particular result for Alexium because I really want their technology to work. I really want to buy a shirt, a running shirt that makes me cooler as I run. That'd be awesome. Anyway, by the way, the chart is horrendous for this company. Alexium. I did at one point own shares in this company, and then I went, nah, there's no point owning shares in a company that had promise, but was well away from realizing their promise or their potential. And I'm very glad I sold out because this is a ugly, ugly chart. At one point, many, many years ago, share price of this company was $1. I'm pretty sure it was above $1. Yeah, $1.10 back in 2015. 10 years ago, it was $1. Can't believe that. 10 years ago. Yeah, almost 10 years ago, share price was $1. Now it's zero point 0.6 cents. This is why you wait. Be patient and wait. Don't buy just because you think, wow, this company, their technology is great. Just wait until they prove their technology, improve their business model. Okay, great example for being patient and waiting. Coming in number 4, we have Beacj Energy. Share price down 9.3% on quarterly activities report. Why is the share price? I actually did not go through this. Then I saw the share price down, so I didn't even bother looking through this. So I went straight to Capital Brief. Why is the share price down? And they did mention it. They did mention it somewhere here. Beacj Energy shares tumble on 474 million impairment charge. Now, is that the real reason the share price is down? Just an impairment? Anyway, so if we have a look, typically when I see these sort of announcements, I want to have a look at how their production compared to any forecast. And I didn't really see that because I went through this fairly quickly. But what I did see was sort of positive, I thought. So substantial earnings growth in financial year 25 with underlying EBITDA up 20% and underlying profit up 30%. But was that a little bit worse than expected? That's the other thing, because I don't really follow this company all that closely. Financial year 25 operating cash flow up 46% to $1.1 billion. So that sounded good. Net debt of $368 million. I'd like to see how that changed over the year. Financial year 25 pre-growth free cash flow break-even, oil price reduced below $30 a barrel. That sounds pretty good. And then they have the non-cash impairment charge of $674 million. 474 after tax, related predominantly to lower commodity price outlook. Okay, so I'm just going to assume that Capital Brief is right, and that's why the share price is down. They also have, if you have quarter-on-quarter change, it was down, but they should always, I think, have a previous corresponding period. Maybe not. But production was down for these are some negative numbers. Okay, but I thought it was okay. I didn't think it was that bad. In fact, the CEO says they ended the financial year with strong results for the fourth quarter, material growth in production and revenue, and strengthened balance sheet to pursue growth opportunities. So when I went through this fairly quickly, I thought, it's not that bad. I didn't put it on my watch lists. I didn't put it into my spreadsheet here, my notebook. And then I saw the share price down. So I must have missed something. And I just trust that Beacj Energy is right. So not Beacj Energy, Capital Brief is right. That's the reason why the share price is down. You could go through this. I should do this more often. Just copy and paste this into, which might take a while. This is one of the problems I have with these sort of announcements is they're long. They can be really long. What you can do is just put this into ChatGPT and see what that says. Because Capital Brief could be wrong. Or it could be right. Why is Beacj Energy share price down on this news? Let's see if it says anything of note. Agent mode. What is agent mode? There you go. So Beacj Energy's share price declined despite a seemingly strong financial year 25 operations report, likely stems from the following key concerns raised in the announcement. Massive non-cash impairment. There you go. The first thing they mentioned. For me, that is not that negative. Or maybe, yeah, it's not that negative. Lower realized commodity price. Okay, yep. Reserve downgrade at Bahara Springs. There you go. Cooper Basin flooding impact. There you go. And what's Cettire still not online? Okay, so there are a few reasons there which I did not even think about. So let's have a look at the chart for Beacj Energy. I've traded this once before, and I'm not trading mining companies again. And looks like I have put in a trading range for Beacj Energy, and it's nearing the bottom of the range. And it's been in a trading range. This is a weekly chart. It's been in this trading range for about 5 years. So the bottom of this range is just above $1. So share price of this company is $1.17. So just by looking at this particular weekly chart for Beacj Energy, it could be a trade. Even though I said I don't trade these sort of setups or mining companies, I wouldn't be against trading a setup like this, even if it's a mining company. Okay, coming in at number 3, we have Pointerra. Pointerra. Share price down 19.3%. So I understand it. So this goes back to, we go back to last quarter results. Last quarter results were terrible, were horrendous, were awful. But I think there was a thought that the next quarter results were going to be much better. If you go back to April, their receipts of $730,000, which was a shock. It was so low. It was shocking low because the first 6 months they had $7.2 million in receipts. So to see it drop significantly in a quarter, I was like, is this a one-off? Do they have a lot of receivables? Are they going to get a lot of cash flow? And I think that was the belief. I can't remember if they actually said it somewhere in here. They might have said something that there might be an increase in cash reserves. I can't remember. But I think the expectations were that the June quarter results were going to be significantly better. And they might even be cash flow positive, that sort of thing. And I was looking forward to these results just to see if that was true. Because, in fact, at one point I was thinking maybe I should buy before they release these results because on the expectation they were going to be much better. And then with the company not releasing the results until today, I thought, yeah, they're not going to be good. So this was one of the results I was looking forward to. And then because we didn't see the results until today, before I even opened up these results, I thought, yeah, they're not going to be good. And receipts up 1.6 million, but I think the market expected way more than that. In fact, if you have a look, actually I won't do it here. If you have a look at the cash receipts history. Yeah, so the 2 previous quarters to this, they had 4.2 million and 3.1 million receipts. And it looked like maybe the company hit that inflection point. But the last 2 quarters, only $2 million or $2.3 million in receipts over 2 quarters. The other thing I didn't like about this is, spinning it as being really good. Like, maybe not really good, but how it's improved from the last quarter. But the last quarter, the receipts were really bad. So that's one thing I didn't like. But I suppose you do have to spin it in a positive light. The other thing I would say is a lot of times when a company has a really good quarter, they should highlight the really good quarter straight away. But if you have a look at Pointerra's presentation and commentary, it's just talking about the company first. Nothing about the financial numbers. And then you finally get the financial numbers on page 5. Okay, so let's have a look at Pointerra. This is one of the more story stocks I do own. And they've been a big disappointment recently. Would I add to my position? No. I think this is sort of set up or sort of company where I just want to see the proofing. Its share price dropped significantly on the 30th of April. It's down 27.7%. Looks like the share price rallied but leading up to these results, and looks like maybe the market expected better results, and now the share price is down. Still above where the share price was back in June, but not a good quarter for the company. Okay, coming in number 2, we have Flight Centre. Share price down 7.3% on a negative trading update. This is a no-brainer. This was an obvious share price decline. I'm always interested in these sort of results or these sort of announcements may in this case because Hello World released a positive trading update, was it last week? So I thought, well, if Hello World's doing well, maybe Flight Centre's doing well, and what's the other one? Webjet's doing well, and Corporate Travel Management's doing well. But no. In fact, here we go. 285 to 295 underlying profit before tax, just below bottom of guidance, and reflecting short-term cyclical challenges encountered late in year. So this is a downgrade, or they performed worse than expected. When a company releases this sort of downgrade or upgrade, I like to understand why. And the reasons why include underperformance and additional non-recurring costs in Asia, and the significant impacts of escalating tensions in the Middle East, and the ongoing global downturn in bookings to the United States on leisure results late in the year. Yes, I said leisure that way as a homage to United States, because one of the words I cannot get around them pronouncing is leisure. Leisure. No, it's leisure. It's leisure. So it's leisure and also aluminium. Okay, so that's Flight Centre. They also mentioned that Australians are tending now to go closer to home, like China, Japan, Fiji, and New Zealand, instead of going further afield. So that's interesting as well. Let's have a look at the chart for Flight Centre. The other thing is, when Hello World released their positive update, Flight Centre share price went up a little bit, but not as much as I thought it would. And in fact, this chart is big meh for me. In saying that, it's at a support level. That's a support level. If you have a look at the weekly chart for Flight Centre, it's still just above the COVID-19 lows, but keep in mind the company did a massive capital raising somewhere in there, but still just above that level. By the way, that level is about $8.80, so still has potential to fall even further from here. Okay, and the stock of the day, sort of a no-brainer today. Cettire, share price down 23.53%. I was trading this and then I got out. I'm so happy I got out. And this was me slightly changing the way I trade now. I want to not only, but mostly trade positive events, not trade on share price on a company whose share price has dropped a lot because of a negative event, because a lot of times negative events happens in pairs or triples. So Cettire share price down 23.53% on US tariff policy update. Now, the share price of this company dropped a lot. If we can find it, trading update on the 12th of June. I think it was that one. Or was it further back than that? No, it was that one. Share price dropped 31% on that day. Trading update. Now we have a tariff update. And if I remember correctly, no, I can't remember this one. In fact, what I'm going to do here, I'm being very lazy. I want to do this more because why down? Why share price down? Why share price down? It was something to do with tariffs on goods below a certain amount. So let's see what it says. Key reasons for the drop: loss of de minimis exemption. Yeah, $800. That's it. So starting 29th of August, all shipments to US, even those under $800, will be subject to import duties. Okay, so I thought it was just under $800, but it's all goods, regardless of where they were manufactured. Previously, Cettire could ship most items to US customers duty-free if the value was under $800. That's right. Now I remember. Heavy US exposure. Yes, 40% of Cettire's gross revenue came from US shipments. A significant portion of their sales will now face added costs, threatening margins and potentially reducing customer demand. And if I remember correctly, some of the manufacturers are already saying they're going to increase the prices. Several major luxury brands have indicated they would seek to increase pricing of luxury goods in the US market to mitigate possible tariff changes. Again, tariffs are a tax on the citizens of that company. The country that exports a good doesn't pay the tariff. I'm not sure Trump knows that. I just don't know. Or his supporters know that or understand that. This is a massive tax for the American people. Massive tax for the American people. Okay, so that's Cettire. Share price down 24%. And let's have a look at the chart. And yeah, well, I think this chart speaks all. The other thing is, when I traded this, I forget exactly what price I bought, and there was a nice little rally up until the 25-day moving average, and I just sold out. I just went, nah, I can't handle this because you have to pay attention all the time to these sort of situations. So that's why I've slightly adjusted the way I trade, and I prefer now to trade the positive events, not the negative events. Okay, now on to the chart of the day. Speaking of positive, I've noticed Siteminder popping up a lot on many podcasts, Livewire articles. So there seems like a lot of positive sentiment behind this company. So they create software for hotels, motels, whatever, something like that. Not yet profitable. Operates as an open hotel commerce platform. It offers hotels and accommodation providers a comprehensive range of products and solutions to manage and streamline distribution of. But this is a chart of the day, so I don't really care about what the company does. Okay, so why is this the chart of the day? Really nice rally over the last few weeks, probably aligned with all this extra commentary I've heard about this company. So much positive thoughts about Siteminder. And then a few days ago, last Friday, share price broke out above a nice little resistance level, and the share price is now in an uptrend. I'm calling it. Share price of Siteminder is now in an uptrend, and we've seen some nice little volume coming in the last few days. So Siteminder, chart of the day. And that is all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.